All right. Good evening, everyone. Uh, Mark Teran here, mortgage advisor since 1986. I'm here to answer questions about home loans. If you're over there on YouTube, you need to come and join me over it because I'm streaming live on YouTube and also on Zoom. You need to join me at Zoom with markteran.com because I'm not able to monitor both chats. So the chat I will monitor is the one on Zoom, and I can answer questions that you have. And tonight's topic, we're going to be talking about pre-qualification versus pre-approval versus conditional approval. So let me share my screen, and we're going to have fun tonight and go over some basics about home loans and the process, which is super critical in everything we do. So pre-qualification, what is that? Basically, the customer gets referred to a loan officer by a realtor, by a friend, or, whoever we got has referred you to a loan officer. And you and that loan officer are going to have a conversation in regards to your income, your bills, your credit, your savings, what you think may work for you. And they'll come up with an idea of what you may potentially qualify for based on that conversation. And often, to help the consumer conceptualize and get an idea what that looks like, a loan officer will share some estimates with you. I'm going to bring up a tool that I use all the time. It's called Mortgage Coach. So let me bring up that in my share here. And let's make sure that you're getting to see the same thing that I am. Okay, so you'll have this sample, right? And in this case, I've sent a link out. They're able to click on the link and a little video will pop up and we'll walk them through it. So over here is summary quote date with this particular customer. We're going to discuss, hey, here's what it looks like with 3% down. Here's what it looks like with 5% down, 10% down, and 20% down, right? We've got a purchase price. Lots of options here can vary. It's going to be customized based on the conversation that was had with the customer or borrower. In this case, I've highlighted the monthly payments that include everything in there. I've highlighted the total cash to close, how much it's going to take for them to get in, and I'll instruct them to click on a more info tab. And then up comes a payment breakdown to show principal and interest, property taxes, homeowners insurance, mortgage insurance if it applies, total monthly payment, everything included, right? And this is all done to educate them on what they're looking at when they're looking at buying a home. And then I'll instruct them, hey, you can click on this closing cost tab. And here we've got the down payments. And then there's some, loan to value, how much we're putting down, and then costs. And I'll usually instruct them to go down to this fee detail and click on that. So I'm going to do that right now. And so you can see um, up pops up various different closing costs, all the closing costs that can be anticipated when this person is purchasing a home. And so we have a video that explains this to them and goes over it in, fairly well detail, just so they have an idea what they're up against, and they can let us know if they're interested in proceeding forward or not. Let me go back to my original screen here. So a pre-qualification is basically estimates. It just gives them a general idea of what they may be able to do based on the conversation. But it's really, there's been no analysis done in regards to, really looking at their application, their credit. And so the next step is called pre-approval. And pre-approval is where you are going to actually complete your application. You're probably going to have a credit report run, whether it's a soft pull or a hard pull. They're going to have some sort of credit review. Um, the loan officer, like myself, is often going to request pay stubs and W-2s and bank statements, maybe tax returns if you're self-employed. And so we get a much better idea of where you're qualified at. But here's one of the biggest things that I see happen. Number one, so we get some of that information in from the consumer, but often maybe they, didn't get all their pay stubs in. They got one from several weeks ago. They got maybe one of their W-2s. They didn't get all the pages to their bank statements. So they kind of turn in not a complete review. And yet they still will ask, well, can you, kind of update my pre-approval? What's it looking like, now that we have a little more clarity? And so I'm going to bring back up that loan options page, right? And so maybe we've drilled this down a little further based on the information that we have. It's changed a few things, but we still are dealing in the world of this is an estimate, because until you get all of your proper documentation in and it is thoroughly reviewed, do you really have a much formal pre-approval? So too often I see the pre-approval, the consumer's like getting an update and they're thinking they're all good to go. And part of that, let me go back to my original screen. Part of that is they don't realize how complicated loans can actually be. And no matter how great their income, their credit, or their savings, often there are rules that just blindside, right? Because they don't necessarily make sense to the consumer. Sometimes they may not even make sense to me. And so let me give you a case in point. So one case here would be like bank statements, right? We need those bank statements because they're going to be reviewed by underwriting. The underwriter is going to review the bank statements and see what kind of deposits are going in and out of that account. And if there's a big lump sum of money going in there and they can't identify, like it's not clear that it came from the person's work, they're going to say, hey, Mr. Loan Officer, we need you to document and explain where this $5,000 came from. And let's say we reached out to the customer and the customer says, well, yeah, I pulled some money out of my credit card. I, well, that's not allowed when you're getting a home loan, right? They don't allow us to borrow to borrow. It puts you in double jeopardy. And so the lender doesn't allow that. And they require that we document where those funds came from. That's just one example. Another example might be, I sold something on eBay. And so there you are. I had cash under my mattress and I pulled the cash out. Well, the lending guidelines often have an issue with that. We've got to document where those funds came from. Another case in point, let's say I have someone who's paid hourly, but they say in conversation, they've said, hey, Mark, I am guaranteed 40 hours a week. I'm at this rate of pay. And so we do up our happy numbers. We create our estimates for them. Let me bring that back up there for you. So we create these estimates based on this information, and everybody thinks that they're all well and good until the pay stubs come in, and sometimes they show, well, it wasn't 40 hours this week, it was 36 and a half. And then like, okay, well, what happened? Well, I was off for a few hours and without pay. Okay. And maybe they only sent one pay stub in. And so then we finally get the next pay stubs in, and we've got 32 on one and 38 on another. So we've got hours that are varying. And we get this into underwriting. It's like, well, hey, you got a variable hour worker. It's not really 40 hours a week. We can't use that. We're going to have to average the income. And then maybe we've got issues. They haven't been on the job that long. So what I'm unfolding for you here is that there are surprises that happens in loans that are not properly documented and vetted out up front. And if you've ever heard a horror story about a loan going sideways, this is the predominant reason why. The consumer just assumed that they got some of their information in, they're good to go, they're fine. They got to take a look at these estimates, and why heck, these estimates worked for them. They love the loan options, they're good to go. They found the house that they love, and they're ready to move forward and get into contract. The problem with that is that loan isn't truly vetted. You're putting yourself and everybody else in jeopardy in that transaction. And here's the big one for a consumer. Um, let's say you do that, it's a rush to get all your documentation in because let's face it, today loans and deals are expected to close quickly, sometimes as quick as 15 days. You need to pay for your appraisal, you've got inspections to be done on the property. Truth is, you don't want to be dinking around with your home loan process, and right, you shouldn't be worried about that. You should be focused on properly negotiating the terms of the home you want to buy, that you're spending hundreds of thousands of dollars on, and that you're going to pay money up front to get into contract. You're going to have to do an earnest money deposit. You're going to have to pay for appraisal, inspections, all of that stuff. If your loan goes sideways, is going to be for naught. You wasted your time, you wasted some of your money, you wasted the energy. You've got a pretty upset seller and listing agent because they took their home off the market in anticipation that you were buying their home. And that loan officer is going to be grinding in their tummy of, why didn't I make them get all their proper documentation in and get them fully pre-approved and conditionally approved if there were any questions prior to us getting into contract? Because there's nothing worse than having that happen. So what is conditional approval? Conditional approval is where, yes, we need to get all the proper documentation in because the underwriter and the processing team, so it goes from the loan officer over to the processing team that packages that whole file up and sends it into underwriting. And it doesn't get sent to an underwriter until we have all the proper documentation. And that documentation has been reviewed. And oftentimes there are questions that come up on that documentation. And so that may beget more documentation needed before we are prepared to submit that file to the underwriter. And once we're there, we've got all our ducks in a row, we've submitted to the underwriter. Now the underwriter is going to underwrite it based on the terms of what we've submitted it on and come up with a conditional approval based on certain conditions. And the beauty in that is when we haven't found the property yet, we've submitted based on a particular program and sales price. That's all well and good. But what we're going to find out is what questions the underwriter may have about the file, what they need us to further explain and document. We're going to be able to determine how much income can we actually use to qualify, especially if someone is hourly or if someone's self-employed. I went over a self-employed scenario last week. So we get all of that analysis done. We know where we're at with our income. We know what questions have come up in the file. We know where we're at with our assets. And now, when we come out, your loan professional is going to provide much clearer estimates for you of what you really can do. Let me bring that page back up. So here, right, each time we do this, we go from pre-qualification to pre-approval, right? Pre-qual is just a really fuzzy estimate. Pre-approval, we're kind of dialing down, getting pretty darn close. Conditional approval, we have really great ideas of what you actually can do and how much you're going to be able to qualify for. And, so we've dialed down your options. We recreate these each time. And truth is, you get your conditional approval. You might find your home right away. You may not find it for months. And if that's the case, normally a loan professional like myself, you reach back out to me. We're going to update where we're at and what your qualifications look like. So this is huge in the process of getting someone conditionally approved. It's a complete game changer. Let's go back in this whole process of buying a home. And I promise you, if you get yourself conditionally approved through underwriting prior to going out and falling in love with your home, you are going to have a much smoother journey towards your home buying process. And we're going to know that you are financially credible and your offer is way more likely to get accepted. It becomes an unbeatable offer compared to others that are just pre-quals and pre-approvals. So conditional approval, that's your VIP pass. That's a game changer. It's next level to getting your home loan done the proper way. And you can focus on home buying. Should you want help, I am just one mortgage advisor out there of many great mortgage advisors in this industry, and I would love to help you. I'm Mark Teran, your mortgage man at American Pacific Mortgage, and we can work on your pre-approval and aim for that conditional approval and set you apart from other buyers. Give me a call at 916-768-6530, or you can visit my website at www.apmortgage.com/Mark, M-A-R-K -Teran, Teran, and we can get started. Let's secure your dream home with the best possible financial backing. I would love to help you. Have a good night.